What's going on, guys? Just throwing together a quick video for the weekend. Hope everyone's enjoying their weekend. Last week's price action was fucking perfect. Legitimately fucking perfect. We didn't get the price that we want. We had some calls expire out of the money. I did. Not fun. It is what it is, though. I mean, the algorithm is going to do that. It's a premium vacuum. That's what it's going to do. Still tracking perfectly, and we are about to see some fucking boom candles for real. So with that being said, jumping into the video, we're going to start with the macro. I showed you guys this in the last video. This is just updated now. Descending trend line is taken from the same spot on the left cycle. This is prior to the January squeeze. And then the current cycle over here, same spot. You have descending price action the entire time. Descending price action until you flatten out right here. You come down, flatten out, and then this is the pattern that you have play out. Same thing over here. Descending price action, lower lows, come down, flatten out, and now we are being pushed to the right and through resistance. We actually broke out of resistance of the macro on Friday, which looks very, very fucking good. So this is some macro perspective. Probably going to come back to this chart later to show you guys what I got for, our peak next week, what I'm expecting. So that's pretty much it with that. Jumping into the 4-hour line chart. This chart is more aesthetically pleasing than anything else. I don't really use this. I just like looking at it. Really what you have is a W on both sides with 3 peaks in the middle. And that's exactly what you have here too. It's a W with 3 peaks in the middle. It's just a fun chart to look at. It looks very nice. Gives you a pretty clear picture of what you got going on. A little bit easier than the candles, I would say. So that's just that. That looks very good for us. The 4-hour candle chart, and this is zoomed in now. So this is, these boxes are labeled at the purple, red, yellow, and then bluish color. And then same thing over here. This next chart is zoomed in with candles on these charts. Pretty much the same movement. You have this V here in the purple. Come down, you ladder down here. Same thing here. And then you come here to the bottom, form a cup up, come down, up, form a cup up, down, up to the resistance, reject it, retrace, break through, reject it, retrace, break through. Same thing on both sides. This is the January 15th knife. Very exaggerated. I posted something in the Discord a while ago. It's more a tinfoil than anything. Pretty much saying because we were supposed to have a lower low on this side of the W. I'll show you what I mean. So this side of the W here was supposed to be a lower low than this. Just the same way you have it over here. This is a lower low right here than this is. This is the lowest low when you flatten out. It's right here, right before you squeeze. We were supposed to get this lower low, I'm assuming right here. That should have been it. The gap fill at 405 should have been our lower low. I theorized maybe the algorithm, due to cost to borrow, FTDs, all that fake shit, is possibly the reason that the algo couldn't bring this, this down. Maybe there was a lot of buy pressure at the gap fill at 405, and that's why we found a bounce. And the algo couldn't just find the sell pressure to make the lower low. Fast forward a couple weeks, and then we're in the January 15th sequence right here, calling for a knife, and then after hours we knife. Way more exaggerated than I originally thought, but it made sense in the grand scheme, giving us the lower low that we did actually get after hours. It wasn't intraday, the lower low was after hours, but we still got it regardless. So regardless of any of that, the pattern still played out perfect, and we are now outside of the macro. We broke through a lot of price action here, but we are above the macro resistance right now, sitting right above it. So again, looks very, very good for next week. What comes next? We're probably sitting somewhere right here because we didn't cross this high yet. And just based off my tracking, which I'm going to show you, we're probably sitting somewhere right here. We didn't get the rest of the move, and this is why our calls expired out of the money this week, the $6 calls. We didn't get the rest of the move, and that will be coming next week, in my opinion, along with the rest of the squeeze. So that's pretty much that. Jumping into the micro now. Now, this is zoomed in even more. This is a 5-minute chart of January 22nd, 2021 on the left, and a 15-minute of our present day pattern we got going on. This right here is zoomed in right here. This whole sequence here, this whole thing, the rejection, retrace, pop through, rejection, retrace, pop through. This right here is zoomed in on a smaller time frame. I've been tracking this for the past 2 weeks, and it looks very good. And I've been posting in the TA sections. Everyone has seen this by now. This is the pattern that you get. I'm probably in the way here. There's the gap, and then you come up to the top. And then this is the pattern that you got. And then you break out and hover right above the resistance. Same thing here. You break out, hover right above, and then you gap down. Same thing. Gap down, bounce off of the previous resistance as support, fill the gap. Same thing here. Bounce off of the previous resistance as support, fill the gap, and then you come down one more time to test the previous resistance as support again. Same exact thing here. You find a bounce and an uptrend, you find an uptrend, and then this uptrend pretty much takes you to the squeeze. We didn't get the rest of this price action. This is why our calls expire out of the money this week. But this is the rest of the price action. After this day is 2 gaps, and then the algo snaps, and you go to your highs of January 2021, which I'm expecting next week. So this is zoomed in to what I showed you in the last slide. And then this is zoomed in even further. This is what I've been tracking all week. This played out in about 2 hours, and this took us an entire week. This uptrend that we're sitting in here took us an entire week. It tracked perfectly the entire time. You get this W here. You can't really see it because it's the 1 minute candles, but this is a W here, flatten out. Same thing here, flatten out. Come up into the next range, flatten out again. Same thing, come up to the next range, flatten out again. Then you come up even further, higher highs here, higher lows, same thing here. And then into the last range, you come up, test on the yellow, same thing, test on the yellow. And then you come up and flatten out, and we are sitting right above the support right now, which would be right here, probably in this doji candle right before these boom booms. And these boom candles here is the start of the squeeze in January. So that's where we are. As soon as we cross 555, 556, whatever it is, we are in these boom candles that took you to the highs of January 2021. So, and fuck. Interesting. My computer is frozen. Are you serious? Right in the middle of a video? Bruh. Why can't I click on anything? Interesting. That was very annoying. I don't feel like making a new video just because of that, so I'm not going to. But yeah, this is pretty much the uptrend that we spent the entire weekend. Here is the resistance, and this resistance is meeting support at 9 a.m. on Monday. So possibly on Monday, we just ride this support up and break out at open. I'm leaning towards we're just going to gap up in the morning, probably to the $6 or $7 range. We don't have to. We could just ride this up until open and then break out from there and then play out the rest. But I'm leaning more towards just gapping up on Monday. So that is that. I forgot to show this. This is the SPY charts. I showed this in the last video as well. You have this W that plays out here, and then you pop up into this channel. Same thing, you break below. And I said in my last video, every time you break below this channel, you regain the channel. And what happened? We regained the channel. So it looks very good. And this break below and then the reclaim of the channel here was pretty much at the same time as the squeeze in January 2021. So we're there. We're at the end, and we're about to squeeze, in my opinion. So that is that. I just want to show some more confirmation. This is the ape chart, looking pretty bearish. So, which is good, because if you guys have been paying attention, we've been inverse ape for, I think, since the knife of January 15th. I could be wrong, it could be longer, but since the January 15th knife, the after hours knife that we got, we've been inverse ape. So what you have on ape right now is a pretty nasty head and shoulders here, which is a bearish pattern. And so we're expecting AMC to squeeze next week anyway. It would make sense if we're inverse ape that ape would shit the bed. So that looks like what's going to happen here. It looks like this head and shoulders is going to play out, and ape is going to shit probably back to the lows of 65 cents. It could be lower. So anyone who's holding ape, I'm just throwing that out there. Not financial advice. It looks bearish to me. It makes sense to me that ape would be very red next week. So here would be AMC squeezing and ape shitting. AMC squeezes to 20, 30 bucks. Ape shits back down to 60, 50 cents, something like that. Then from there, we're expecting AMC to go from 20, 30 bucks back down to 8, which would be this pop right here. And then from $8, we should bounce and find an uptrend, which would be this drop for ape. And that uptrend takes you to MOAS, which is where it would probably sync up, and they would both just fucking rip at the same time. So I just wanted to show this. It's even more confirmation to me. I think it looks good. Not ape specifically, but AMC looks good. Ape looks bearish to me right now. It looks like it's going to be coming back down to these lows, if I had to guess. I feel like this is going to play out very symmetrically. A W type move where you bounce back up to this high right here, come back down to the low here, up to this high, down to this low, and then, you know, wherever the fuck ape is going to go. I have no idea, but I think it's going to play out symmetrically like this. I think ape is going to shit next week. So that's that. Really quickly, I want to show you guys this. So I'm not saying this is the case like 100%. I'm just saying this is just TA based off of the fib extension here, and pay no mind to this chart. We're just looking at this right now. This was the January squeeze. I have this on the 4-hour chart, extended hours, taken from the low, high to the low. This squeeze came up almost to the 4.236. Crossed the 3618, almost to the 4236. So, you know, and I'm measuring this off of this pattern that played out here, where you flatten out at the end. So I did the same exact thing for where we are now, and if we do get the same kind of thing playing out, you could expect a peak of this squeeze around, I would say, 22 bucks. I would say anywhere from $20 to $25, you could probably expect the peak. Just based off of Fibonacci extension alone, $20 to $25 makes sense to me. And then you would come back down and refill whatever gap that we leave on Monday. So really, I'm expecting Monday to, hold on a second. I'm expecting Monday to look something like this. It's possible we just gap up in the morning. I think Monday is going to look something like this. And then after hours into Tuesday pre-market, we're going to peak. And then from there, we're going to come back down and then fill the gap of whatever we leave on Monday. So that would be that. And then you play out this pattern, and then that takes you to MOAS, and then that's it. So that's pretty much that. And to go along with that, the $20 to $25 price target, again, that's based off the Fibonacci extension. I'm going to show you on the macro now. It actually makes a lot of sense when you're looking at this. In January, you flatten out here, break out, and this peak comes pretty much up to the right side of the cup in the yellow. It's pretty much even right there. So just doing the same thing here, this would pretty much take you into this $20 to $22 range here. Maybe you overshoot it a little bit to like 25 bucks. I don't think we're going to go anywhere past 25 bucks on this squeeze. Personally, I could be wrong. We could go to 40. There's a case for 40 just off of measuring the move. We're going to know pre-market, in my opinion. We'll probably open at the top. So I think whatever we open at on Tuesday is the top to me. If it doesn't look like it's the top, I'll let you guys know. I'm selling everything at Tuesday open if we open at 20 to 25 bucks. All of my contracts, I'm exiting them all. Whatever we open at on Tuesday pre-market, if Tuesday is the day. But yeah, so Fibonacci extension, is saying $20 to $25, and then just looking at the macro perspective, it's saying $20 to $25 before we come back down to test the breakout, which would be like $7, $8, form the uptrend, and then MOAS from there. Just pointing this out too, this macro took four years to play out. Approximately on the left, the macro that led to the squeeze in January took about 4 years to play out. The current macro took about 2 years to play out. I'm just mentioning this. I'm not sure if this is going to be the case, but I think it's worth mentioning. This played out twice as fast. From the squeeze here, it was 4 months until the June squeeze. It's possible it's only 2 months until the June squeeze for us, the June squeeze for us, which would be MOAS. It's possible from our peak next week to MOAS, it could be 2 months, which would land in July. So yeah, that's pretty much that. And I showed this last time too. OPEX, 7 days, 7 trading days from OPEX was both peaks. So January 15th OPEX, 7 trading days later. May 21st OPEX, 7 trading days later. June 2nd was your peak there. There was a holiday in between both times, so those ended up landing on a Wednesday. This time around, there was no holiday, so the 7th trading day is landing on a Tuesday instead. It's possible that there is some significance to a Wednesday peak. I think it's more likely the significance is coming from the 7 days post OPEX, the 7 trading days post OPEX, rather than the day of the week. So I am expecting the peak on Tuesday, and that is pretty much it, I think. So what are we expecting for next week? Monday, I'm expecting probably a gap up in the morning to roughly $7. Maybe you open 7 and then you see green the rest of the day and then close the day around, I would probably say around like 850, around the high, the last high that we saw. I would assume we would just gap up on Monday, pre-market, open somewhere, maybe even like 6.3 to like $7-ish. And then, you know, from there, it'll be a green day, close around 850-ish, around this high here. See even more green after hours into pre-market Tuesday, and then open at the top around 20 to $25 from there. So this move is going to happen very fast. There's not going to be much time to FOMO in. For anyone who doesn't know what's going on right now in the AMC community, which is pretty much everyone, there's not going to be any time to FOMO into contracts or any long position. There's not going to really be time unless you're buying on Monday, which I don't know how many people are really going to be FOMOing at the calls when we're up 50% already, unless they're expecting the squeeze to be next week. So pretty much Monday, Tuesday should just be green, like stupid green. And that'll be it. And then we'll take it from there. So that is pretty much the video. I think I covered everything. Ape looks bearish. Nasty head and shoulders on Ape. That looks bearish. Looks like it's coming down to the lows, all-time lows on Ape. Just my opinion. SPY looks great. SPY is very bullish. And AMC on every single time frame is screaming we're about to squeeze. So that is pretty much that. And I'm going to leave it there. Hope you guys enjoy the rest of your weekend, and I'll catch you guys later.